Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 5th, 2022. And that was not the pump, okay? What we experienced last night, I know some tokens, some coins had a nice move to the upside. That was not the pump. Let me be clear, okay? We use Bitcoin as a proxy for the cryptocurrency markets at large. This is the bellwether for the cryptocurrency market. We are waiting for Bitcoin to make a large move, okay? That will then indicate the larger move in the cryptocurrency space, okay? Bitcoin has not yet moved, and I'm going to tell you why, all right? We're going to go on a small time frame and look as to what exactly is going on, okay? There's a clear pattern here that we're going to point out. If that interests you, then watch until the very end. We're also obviously going to look at the DXY, the US dollar currency index, our market mover, and some other things, maybe some other assets in our watch list, all right? So guys, hope you're having a great day today. It is a nice sunny blue sky Monday in the DC metro area. It's a bit chilly, but not too chilly, so we're doing well. All right, let's get into it. We're on the hourly time frame looking at Bitcoin, okay? And this count is, I think, very accurate, okay? Thus far, this count is accurate. Yesterday, Sunday evening live stream was titled Breakout, right? Breakout, like question mark, exclamation mark, question mark, exclamation mark, or exclamation point, whatever you want. Because I wasn't exactly sure. Is this the breakout, right? Is this the breakout? Clearly it wasn't. How do we know that? Technically speaking, you can't have a breakout when you have a retracement that comes all the way down, okay? Like, yes, there are some small instances where you can get something like leading diagonal where your retracement is beyond the 0.618 Fibonacci retracement level, but by and large, if you break that 0.618 level, this is not impulsive, it's corrective. Sorry, I don't know why I can't draw a straight line. Oh, okay. Let's try this the more buttoned up way. Okay, that's the level I'm talking about. Once you came down beyond that 17K level, you knew you were already in corrective territory, okay? And that's okay. Why? Because we said this was most likely a corrective wave, okay? We said yesterday, I said maybe it's a WXY, maybe it's a WXYXZ, I don't know, it doesn't really matter, okay? It just looks like a corrective complex correction, okay? And now I think we have our answer. This is clearly the ultimate move in this corrective wave. This is the, every corrective wave ends in impulse, okay? So you need an impulse before you're finished. This is clearly that, okay? This is clearly that. And if you want to count this, I think it's very clear that you're dealing with I'm questioning now my read. Give me 1 second. Maybe it's not so clear. I would say, okay, Occam's razor, the simplest explanation is usually the most likely. I think this is a double three, okay? There. Again, it's not that important if it's a double three or a triple three. What's important is that you recognize that there is a corrective structure here, that is a complex correction, that this is an intrawave correction, that this is not a break of this impulse, but this is an intrawave sort of respite for continuation. That's the most important thing. Guys, as Elliottians, when we get hung up on, oh, is it a WXY or WXYXZ? It doesn't fucking matter. Because I can read this as a WXYXZ or I could choose to read it as, like I said, a W, X, Y. Okay, I tend towards the more simple explanation. In my experience, whenever given the choice of two options, I'll choose the simpler one. I think nature favors simplicity. It favors elegance. So as a result, as do I. Okay? So I think that this is more likely than not a three-wave move. Okay? That being W, that being X, and that being Y. Right? Y, as we said, is your impulsive move. Okay? So if this is a corrective a move, it fits. And what's really bullish about this? The fact that it's slanted. Look at that. It's ranged, okay? As most corrective patterns are. They're ranged. But typically, they're flat. Or sometimes they're slumped, okay? They're sloped downwards. Which, it's fine. It's just, it's showing weakness. This is showing strength. It is showing strength as it is raised upwards. Okay? This is not necessarily a running flat, but you get the same vibes, okay? Because all the while you're correcting and making higher highs. Higher highs and higher lows, okay? You're making higher highs and higher lows. So what I wouldn't do, given this market structure, is try and be cute and short, right? A lot of traders who really don't, they're myopic. I've spoken about this. They have one style of trading, and that's okay. That's fine. Okay, you don't have to be a jack of all trades to be a successful trader. Actually, one would say that it's best to pick a style that works and run with it. But again, the market changes. The market changes. It's not always in the same mode. It's not always the same season. Sometimes it's spring, sometimes it's summer, sometimes it's winter, right? Sometimes it's the dry season, sometimes it's the rainy season, the monsoon season. You have to adapt. Okay? You have to adapt. And I think the best traders, the best analysts, they're not just able to read one mode of price action. They have wherewithal of the different modes of the market and an ability to read those different modes. So those that day trade and that have heretofore had success in doing the small time frame, I'm going to short this, right, for this 1% dump. Like, you're playing with fire. Do you understand that? You are playing with fire. Like, instead of trying to get so cute, just find, not financial advice, but this is what I would recommend. Find an entry and just hold it. There's no reason to get cute. You don't need to. You can make outsized gains by just playing the percentages, playing the odds, okay? Find an entry and stick with it. And what does that mean? That basically means you're playing the more likely move, okay? On the higher time frames, and we've already seen this, it's more likely than not that this indeed is some sort of impulse that is going up. This is more than likely that, given the way, look at this, on the 4-hourly time frame, your stochastic RSI indicator is correcting completely, okay, with minimal movement to the downside. You're pretty much resetting back to overbought territory. Oversold territory. In preparation for the next move up. So on the small time frame, guys, mind you, this right here is, just like I drew it, this is your level where, okay, this is the big support at this region, right? Around 16, wherever this is, 16.7, 16.8, okay? And you can see that because it's clearly an inverse head and shoulders. You broke it to the upside, right? So you've confirmed that. Guys, keep it simple. Keep it stupid simple. You do pattern analysis. A lot of people, when they first get into technical analysis, they do pattern analysis. Nothing wrong with that. You can take it up a level. you can get a little more subtle with your reads using a Gann or an Elliott or a Wyckoff. But pattern analysis is great, and sometimes it just gives you a general understanding of what's going on, and this is very important. Inverse head and shoulders, that pattern is a bullish pattern if and only if it breaks to the upside, breaks the neckline. This happened right here. What happened subsequent to that? You get a retest of the neckline. This is your retest of the neckline, this wave 4 complex correction that we were talking about, okay? But what's interesting is you didn't even come all the way down to the neckline. Do you see? You are so bullish that you're creating, there's too much buy pressure up here for you to come all the way down to this neckline at this 16,750, 16,7 level. You don't want to play this little range. This little range within the scheme of things is insignificant. If anything, it's an entry point. It's another opportunity to enter the trade because it is essentially a confirmation of this being bullish and this continuing to the upside. Do you understand? So that's the big move. That's the real move. That's the actual move. That's the meat of the move. That's what we care about. We don't give a damn about this stuff right here. Insignificant. Completely insignificant. And if you know, guys, it's all about discernment, right? Whether you're reading the news or you're reading Twitter, people keep saying, oh, Elon Musk is saving the world because now Twitter is the new news. No, you need to be active in employing discernment. Whether you see it on Twitter, whether you see it on CNN, whether you see it on Fox News, whether you see it on Breitbart, whatever the hell you consume, you need to understand to a certain extent what is bullshit and what is actual factual reporting. Okay? You have to have a bullshit meter. Okay? So when you're looking at crypto, analysis, chart analysis, and somebody that is not very clearly stating this is a small time frame move, but it's highly risky and it's probably, not a good risk reward play. If they say that and then they're telling you to short these levels or to long and short and here, okay, then that's fine. But if they don't say that, it's your fault. Guys, how impatient are you that you're trying to short this little move when you may very well be missing out on that? Do you see what I mean? Like, all you got to do is wait a little bit. Just wait a little bit. You've waited all this time. You're telling me you can't wait a little bit for this move? Position yourself. And then ask yourself the question, okay, fine. I get you, Dean. Maybe you have a point. But what's everybody else doing, right? Because sometimes you have a skewed understanding as to what everybody else is doing. You can answer that question for yourselves. Empower yourselves. Guys, there's so many tools out there these days. There's AI out there to really help you become more informed as in anything you want, right? So let's say you pose the question to yourself. What's everybody else doing? What are the best traders doing? You can answer that. Yes, there are tools to answer that. All you got to do is go to CoinGlass or some other site that gives you trading information, okay? And so here, instead of just looking at the liquidations, because that's not that important, to be honest. I know a lot of people make a big deal about liquidations because it's, haha, X got wrecked, or, oh my god, this person lost how much? Big whales getting wrecked. It's cool. It's not that informative. What's really informative for traders is the long versus shorts. You want to know what everybody else is doing? You come here, go to CoinGlass, go to long versus shorts, go to a respectable time frame. So like 24 hours, past 24 hours, what's going on? And what do you see? You can basically see that there's a lot of people that are divided. But by and large, shorts are taking, except on Bybit and Huobi. Okay, this is changing quick. Oh, I was like, why is it changing so fast? Okay, see, that's why you have to make sure you go on the 24-hour period. And you can see it's pretty much split 50-50. There's no like, okay, the best trade or the everybody's doing this or everybody's doing that. It's pretty much half the people are long and half the people are short. You have the bigger players on Bitfinex. You know, Bitfinex, I always say, is a whale exchange. They're more long than short, okay? Deribit, they're more long than, I don't know who trades on Deribit. But you can see that by and large, I think in the aggregate, I would say the bigger players are more long than short, just ever so slightly. So there's no easy answer here, and like, you know, there's no shortcut. You have to make up your own mind. You have to do your own research. You have to figure this market out. There are no shortcuts. There's no channel that's the be all and all. Like, I think my shit is tight. I think my analysis is good, but you know, how do you know that? If you think so, then you must know enough to know good analysis. You see what I mean? If you don't know anything about analysis, how could you ever know that I knew what I was talking about? That's why you can't get around doing your own research, okay? All right, what's another thing you could do to try and figure out what other traders are doing? Okay, there's Binance top trader here. Let's try that, okay? I don't exactly know what the criteria are for being a quote-unquote top trader, but let's just see. Let's just see. Okay, again, I would change the period to 24 hours. Okay. Basically, let's say top traders are traders with, you know, more, they have more gains than losses, right? They've won more than they lost. If you're looking at that, then basically it's showing you that the best traders on Binance are long. Do you see what I mean? You pose the question, what's everybody else doing? I'm going on Twitter. You know, I don't know what Sheldon the Sniper is saying. I don't know what Frankie Candle is saying. But, like, you know, people are just saying, oh, green dot, yellow dot, red, or yellow X, red dot. I don't know who to believe. Like, you know, this big YouTube star or channel said this. What do I... You have to do your own research. If there's anything you can get from this channel, it's the education. This is what I really pride myself on. Whether right or wrong, I'm a huge advocate for education. To make it in this crypto game, this treacherous, dangerous crypto game, and any trading game, you have to educate yourself. You have to invest in yourself. You have to learn how to do technical analysis. You have to learn how to invest. You have to learn what exchanges to put your money on, how to self-custody, all that stuff. All right, anyway. So you can see here the top traders on Binance for a while now have been long, more long than short. Okay? So that's what it's telling you right here. I don't know. What's... okay, so accounts. These... so what's the difference between accounts and positions? Okay, I understand. So their accounts are mostly doing well because they've been long, okay? And then these positions are doing well because they're long, and then half of them are doing well because they're short, but a little more than half are doing well because they're long. You can see that. The 50% line is here. So this is how you read this, I believe, okay? So that's Binance. I think Binance is pretty telling because it's such a big exchange, so it has a lot of liquidity. But yeah, you could just play with this. Yeah, you could just play with this, guys. I encourage you. You know, be your own mentors. Be your own advisors, right? Don't just go ahead and do something because you heard it on the internet or you saw it on YouTube. You have to have an informed opinion as to what you need to do, please. So here, interestingly enough, OKX top traders have made more in the recent Well, let's change this. Sorry. Gotta be careful what position. Okay, here you go. Okay, here you go. So these accounts, given that we're just coming out of a bear market accumulation, it makes sense that most of these accounts have been doing best going short rather than long. But the positions that have been doing best on OKX in the recent past, and by recent past I mean since for the past month, have been long. That's what that is saying. So that's just an idea, just so you guys can understand where the market's trending. Okay? Obviously, you can see all of this by looking at the chart, but, you know, more data is not worse. Corey Wall says, I use XO charts, shows limit buyers, sellers in real time so you can see bigger players absorbing price. Yeah, I mean, whatever you can do to gain an edge, right, in addition to reading the charts is great, you know. I am a firm believer, as you guys know, in, you know, really focusing on price action, really focusing on my read of the market. And that's probably 95% of my decision making. And the biggest indicator I'll use outside of pure price action is the US dollar currency index, which we're actually going to talk about right now. Okay? And this is my biggest indicator. But still, I'm reading price action, right? I've put all this time in and money and effort into learning how to read price action and really honing these skills. This is my edge personally, right? And then the other stuff is just you know, an added bonus. But I'll put, you know, it's no right or wrong. You know, some people are elite at reading that extra information on the side. You know, the Willy Woos of the world, you know, they're trading. He's a trader. He's using on-chain data, but it's still derivative, I believe, of the market data, right? That you get with price action. I think everything is a derivative of price action, quite naturally. So I like to get primary data by really diving into price action. But here, the US dollar currency index, our market mover, I thought that this was a very viable, very likely read. Okay? And right now, from what I'm seeing, this is right here, this region that we're in is very likely a wave 4 correction. I think that wave 1, 2 was up here somewhere. Okay? This is wave 3. I think this move right here, this intra-wave correction, is a wave 4. And I think we need a wave 5. Maybe it comes down here. I don't know. Yeah, here. I'll tell you where it comes down. Very likely. You know, and I'll tell you why. Okay? Whoops. And this is the beauty about price action. There's just so much you can learn from looking at, you know, outside data, but the primary data, you know, just looking at candles, if you can read that, there's just so much information there. There's just so much information there. Look at this. This is clearly an M top, right? You see that? It's a double top. This is clearly a neckline, okay? So what do we know about M tops? They're bearish patterns, okay? Confirmed once you break the neckline to the downside. That has been done. Okay, what happens when you break strong support? And this is strong support because ever since the 15th of November to the 30th of November, so 2 weeks, price or whatever, the DXY stayed above this, okay? So it finally broke it. What happened? It breaks it to the downside. It retests it. That's so always bring it back to your fundamentals. It's so simple. Everything's so simple, we complicate things. But every single time strong support or strong resistance is broken, it goes to retest, then it breaks out. This is exactly what we got here, okay? You have an M top, neckline, broken, retest, now the breakout, okay? This is my, if I had to list all the indicators I use in terms of importance, This DXY is my main indicator because I believe this is the market mover. You do not move a $400 billion market with a few $1 million buys. And this is where I really disagree with the Willy Woos of the world who say, oh, look at how the price is holding. It's clearly because people aren't selling and they're tired of selling, blah, blah, blah. No. That doesn't move the market. Obviously, in the aggregate, everything moves the market. But by and large, the underlying asset, which is the US dollar, will create that fluctuation. It'll seem like billions of dollars are moving in and out of the market, when in fact, it's the underlying asset that changes. Do you guys understand? So essentially, Bitcoin doesn't move that much intrinsically. The money that goes in and out of the Bitcoin market cap is negligible vis-a-vis the valuation of the underlying asset, which is the dollar. Because when we talk about Bitcoin, 1 Bitcoin equals 1 Bitcoin. 1 Bitcoin equals 1 Bitcoin. But here we are talking about, 16K and 20K and 50K and 100K. Yeah, because we're still computing, thinking, evaluating in terms of dollars. That's just where we go. Even the maximalists, the people who feel like, the people who will burn US dollars on stage because they want to make a point how useless fiat currency is and how strong Bitcoin is. They're still thinking in terms of dollars, because in a bear market, guess what? They're talking like it's a bear market because they care. They care what valuation their precious Bitcoin's at, right? So when you understand that, you really see just how powerful this DXY chart is. And obviously, why are we putting so much importance on this? Is because if you could see the inverse relationship from the past 8 years, and why is it 8 years? It's because that's as far back as the data goes. Had the data gone back to Bitcoin's inception, we probably would have seen a 10 to 12 year relationship where Bitcoin is almost perfectly inversely proportionate to the DXY, because as the DXY goes up, Bitcoin goes down and vice versa. Anyway, you broke down from this end top, you retested it. This is at the neckline. This is at the resistance. Just looking at this chart, not even looking at Bitcoin's chart, I expect a move in Bitcoin to the upside, because this is at resistance right now and this pattern is playing out. Guys, I hope you see how simple this is. Sometimes you don't need to go into, so the Fed is going to print a 50 basis points and then we're going into backwardation, all that shit. Like, dude, all that shit is in these candles. Whether the Fed is, printing, this CPI number or that CPI number, or publishing this CPI number, that CPI number, all that is in this chart. If you can read it. That's the big if, okay? But yeah, that's what I think is going on. So if this is an impulse, I do believe that this is likely to be a wave 4. It can't be a wave 2. Why? Very simply, and we know this, it violates one of the guidelines of wave counting. Let's find I'm trying to find this. Okay, here we go. So why do I write off the wave 2 thesis, or the idea that it could be a wave 2? Because let's say this is a wave 1. Okay, this is an impulse to the downside. Took about 1 day, 16 hours. Let's see. Okay, you've already taken about 3 days and 6 hours with this flat correction. Okay, so it's just so incongruous, right? The time this took to print and the time this took to print, it's unlikely that they're related in a wave 1-2 situation relationship. It's more likely than not wave 2 was up here somewhere. Up here somewhere, and this is wave 4, and then you can expect a wave 5. And lastly, very simply, back to your basics, and I always talk about pattern analysis because that is where I started. This is exactly how I started reading charts. I didn't start with Elliott wave. I didn't start with Gann or Wyckoff. I started simply reading patterns, just like a child reads patterns, in intro geometry. Okay, this is just basic. If you calculate the target, the technical target of this M top, it's exactly here, where I drew the approximation of wave 5. Okay, about 103.23. Okay, and that's the breakdown of this M top, and that's confluent with the idea that this is a wave 4, because wave 5 is typically about 618 of wave 3 retracement of wave 4, or the inverse 1618 of wave 4, right? Various ways to project wave 5, but I think that is very likely wave 5. And then what we can get from that is some sort of correction and then continuation. Okay, so you'll probably come back in this area, just because I think this is an entire impulse, and that'll be a wave 1, and then your wave 2 is probably gonna look something like that. In the meantime, I would not be surprised if Bitcoin just kept going up and up and up and up, just because it has a lot of ground to cover, right? We know that the relationship between the DXY and Bitcoin is on a month-to-month basis. Let's just show that really quickly. I talk about it. I don't want to short you guys by not showing it. So here's a chart that I made months and months ago. But yeah, month-to-month relationship. If you look at Bitcoin and the DXY, and this goes all the way back to 2014, okay, to present day, you can see on a month-to-month basis, they're almost exactly inversely proportional. Okay, inversely proportional. And so within the month, you may have some fluctuation. This pattern, this relationship may break a bit, it may deviate, but in the aggregate, on a month-to-month basis, you can expect that relationship. Okay, so DXY going down, Bitcoin's going up. And why do I think that? Even though my analysis is correct, and this is wave 4, wave 5, right? Let's see, wave 4, wave 5, and then we end up doing this, that Bitcoin's still going to go up even though this wave 2 prints, is because if you look at the past, let's go on the monthly time frame, 2 to 3 months on the DXY, you can see this is a monthly chart. The DXY has been red, falling for 3 months straight. Okay, so you should expect Bitcoin to be green for 3 months straight, right? Wrong. As you well know, because you're in this market and you're paying attention, if you go on the monthly chart, Bitcoin has also been red pretty much almost for the past 3 months. Okay, the first month was a bit green, but the subsequent 2 months have been, the second month was really red, and then this last month was a little bit red. Okay, so there's a lot of room to be made up. If that relationship that we looked at holds, and the past 8 years are any indication, then Bitcoin is very likely to bounce, to snap back up, kind of like a rubber band. You know, you pull it back and it pulls back, it reverts to the mean. And the mean is this relationship right here, where I can't mark this up, but you can see the relationship is where, okay, DXY goes down, Bitcoin goes up. That's been interrupted. That's been slightly not broken, but that's off kilter. So we need to go back and revert to the mean. That's why I'm expecting a strong, violent move to the upside, creating some mean reversion in Bitcoin's price. Okay, that hasn't changed. I've talked about that before on the channel. Okay, so back to the small time frames. Let's see. You can already see we're getting a response. And look, that 4 hourly momentum indicator was topped out here. Okay, it looked really bad. Oh man, 4-hour momentum indicators topped out. We got to go way down, right? What happened? You essentially reset this by slightly not even making a lower, you didn't even make a lower low. You went up from here and you still maintained a higher high ever so slightly, okay? And your 4-hourly momentum indicator is pretty much now oversold again, okay? So again, we're looking for that big move to the upside. So that's Bitcoin on the small time frame. That's Bitcoin on the large time frame. This is why I expect a big move to the upside, okay? Looking at our main indicator, the DXY, looking at the price action, and that is my case. With the time we have left, I want to look, as usual, at our watch list, okay? And what else? I want to have a peek at our general list and see if there's anything that hasn't run yet. And it looks like Axie Infinity has moved. Good for it. Yeah, I guess Axie Infinity's like the only big mover in, at least in this watch list. But again, you know, we're looking at Bitcoin because when Bitcoin moves, then really everything's moved. Although we know, because this is a proper bull market, Bitcoin's not going to be the leading indicator. It's not going to be first out the gate. Let's see. Should be able to see Bitcoin dominance plunging. It's still hovering. Bitcoin dominance is still hovering. Okay, you can see on the monthly time frame, you're hovering on the neckline, and it still hasn't broken this neckline. And it makes sense because had it broken the neckline, once it breaks the neckline, you know the bull market is on. We get our big green candles. That hasn't happened yet. We've been teetering. This is likely to break, okay? You can see this on the small time frames. You can see exactly what I'm talking about, right? You can go on even smaller time frames. You can go on the daily, and you can see this is waiting to just dump, okay? And again, what's this mean? It's not like it's not sort of in an independent. It's a derivative indicator. Bitcoin dominance basically just shows you how the altcoins are doing against Bitcoin. Okay, so if this is going down, that means altcoins are gaining up against Bitcoin. All right, so I'm going to take a very tiny bathroom break, and then I'm gonna come back, talk about this watch list, go through the different assets on my watch list that I'm currently trading. And if there's anything that you want me to look at, put it in the chat now, and I'll look at it when I get back. All right. All right, I'm back. Let's see. Now let's go through the watch list and we'll call it a stream. Okay. So yeah, we're getting our bounce in Bitcoin at this major support right here, and we should be getting a bounce in other assets as well. Polkadot on the 4-hourly time frame looks as if we are getting that bounce. I've said in the past, I'm not exactly sure what this is. Is this fully impulsive? Is it a corrective wave up? Not exactly sure. 3.5 days up here. Almost 3.5 days down. Okay, this may be a 1-2 situation right here. It satisfies everything about our wave 2 Elliott wave retracement, and this is really bullish. Okay, if this is true, and it's likely the case just given what we just showed, this is likely a wave 1 wave 2 retracement of 382, which is the minimum retracement, right, for wave 2. You're likely to get wave 3 followed by a wave 4 and a wave 5, which is very nice. Here, let's just measure wave 3 here. So this is Polkadot, okay? But do you see that wave 1 and wave 2 took around the same time? Both took about 3.5 days, and wave 2 did retrace to a minimum retracement of the 382. So it's a shallow wave 2 retracement, which you don't always get, but you're not always coming out of the bottom of a bear market, okay? So that's really bullish because we know wave 2 tends to be sharp and retrace between the 0.5 and the 618 of the previous wave. I would not be surprised. I wouldn't be surprised if wave 3 came over here and was extended. Okay? Wouldn't be surprised if you did something like this. But again, when you're in these impulsive moves, it's best to not underestimate. Don't overestimate, don't underestimate. Just respect the trend. You know how traders always say, the trend is your friend until the very end. Again, you have to use discernment and understanding as to what mode of price action we're in. Are we in intra-wave correction? Are we in consolidation reversal? Are we in trending markets, right? Trending up or trending down. Those 3 different modes. And if you're in a trending market, then definitely the trend is your friend and you don't want to fade the trend. Here the trend is up. Know that it's very likely that the trend continue to go up, even though you do experience some intra-wave correction, which is normal. Don't confuse intra-wave correction for consolidation reversal when you're in a trending market, okay? And so we have this trend going. It may be an extended trend. You may get a regular wave 3 between 1618 and 2 Fibonacci extension. Who knows? Who cares? If you're in the trade, don't fade the trend. Keep it in unless and until you see some clear bearish divergence. And then on the short-term time frames, yeah, go ahead and sell if you like. But on the long term, it's a no-brainer. Just leave it. If you can afford to, just leave it. Because this is one of very many 5-wave moves to the upside. Okay, so that's what I see on Polkadot. But yeah, looking really, really, really good. And once again, just doing the simple pattern analysis, you can again see this nice W pattern that you broke out of, retested as support, right? That's confirmation of this bullish pattern. The breakout right here and the retest. Every time you break significant resistance, you retest it as support. Principles, words to live by as a trader. Doesn't matter if you're into Gann, Wyckoff, Elliott, or neither. This is a basic fundamental tenet technical analysis that you should know, and know so well that you breathe it and you just like know it in your sleep. You break significant support or significant resistance, you come back to retest it. So always look for that retest. And that is, when people talk about breakout trading, that's the ideal entry. You enter on the retest. This is the ideal entry for the long, okay? You minimize some risk, but you minimize. You don't completely annihilate. You always have to take some risk, right? But anyway, that's Polkadot. Let's see, Cardano. So Cardano, I think this is a really, really how do I say? When I'm looking at this now, what comes to mind is that this is all one contiguous move. This is a flat correction. This is a running flat correction. Okay? So if you look at this in terms of a consolidation reversal pattern, this is clearly your A wave. This is clearly your B wave, right? Of the first degree. And then this is clearly your A wave of the second degree. And this that I just pointed out is my B wave of the second degree in 3 parts. That's the only way this makes sense to me right now. Like, this is quintessentially a B wave right here, okay? Just look at the way it moves. It's either one of 2 things. Either it's a leading diagonal or it's a B wave, okay? Because that could be the A wave, that could be the B wave of the second degree, and in which case this is a leading diagonal, and then you're looking for that explosive extended wave 5. That's also possible, okay? But you know what? It doesn't really matter. Insofar as either way I look at it, whether this is a leading diagonal or it's part of this B wave, I'd say, okay, let's not give you a million different options. I'd say the more likely read is that this is a leading diagonal. Okay, because if I were to say that this is some sort of running flat, that's too drastic. What's so drastic about that, and what's kind of radical about that, is the retracement here. If this came down a little more, then I could say, okay, I'm comfortable saying that this is a running flat, but it's just too shallow of an impulse right here to say that this is the resulting impulse for that whole move. Do you see what I mean? So if I want to be honest, gun to my head, and I'm keeping everything simple, not trying to, overread, because Elliottians, we do this a lot. We're so cerebral in the way we read the market, and sometimes we try to outsmart ourselves by giving the most complicated, convoluted read. Simplicity, my friends, simplicity. I would say, the more simple I get, the better my reads. Even though I know, the edge case that can give me some random count, it's unlikely. It's less likely than you would believe. Okay, more often than not, you're getting a regular run-of-the-mill pattern, and you just have to be able to read it confidently. So I think this is my 2 degrees of AB basing, and right here I started my leading diagonal. Okay, and this is the leading diagonal I've been talking about. It's kind of hard to read. When you get leading diagonals, you get them out of the mire. Once you do your consolidation reversal, there's a lot of buying and selling. People think it's going up, people think it's going down. It's very busy here. Lots of buying and selling. You don't just cut through it, okay? That's where you get the leading diagonals. You slowly matriculate to where price wants to go. But in so doing, you have a lot of resistance. That's where you get the leading diagonal, okay? So what does the leading diagonal look like? Exactly like this. You get a 5, 3, 5, 3, 5 move. And then when it's all said and done, you get that last wave is an impulsive wave. I think that's likely the case. Not exactly sure how to read this leading diagonal perfectly, but it doesn't matter. I think, you know, from a bird's eye view, it looks very leading diagonal to me. I hope that makes sense. Gun to my head. I'm thinking. Let's see. One sec. There's another option. Yeah, I think this is it right here. I'm just gonna count it, just so you guys see what I'm talking about. I don't want to shortchange you. That's my son's favorite phrase. I've been shortchanged. Like, no, I've been shortchanged. Let's see. It's tricky. No. This is fucking tricky. Hold up. Okay. Yeah, that is probably where I want to start. I think this is my leading diagonal here. Like this. Okay. And I noted this earlier in the stream. Like this is the only case where you have an impulse and the retracement of wave 2 can come beyond the 0.618 Fibonacci retracement level and you're still an impulse. Leading diagonals are tricky because they're corrective impulses. They're actually impulses, but they look like corrections, right? They're still 53535s, but they're just concerted. They're scrunched up, and they can typically be channeled. So yeah, it's a good, good thing to look at, if you're really serious about learning how to read these. Just keep an eye on it, whether you're trading or not. Keep an eye on it. Look how it finishes out, just so you can get an idea for what it is. But I believe this is a likely count, right? Those leading diagonals, they're typically range bound in a channel, right? Wave 1, 2, so it's a 5 waves up, 3 waves down, 5 waves up, 3 waves down. And what's interesting about the 53535 in a leading diagonal is, unlike, just think of a regular 53535 extension, right? Except squish it, and you'll see, if you squish it, you get the same thing. You squish waves 1 through 4 down, you'll see that then the retracement can be deeper. The retracement of wave 2, the retracement of wave 4. And actually, leading diagonals are the only time in Elliott wave where wave 2 and wave 4 can overlap. You guys know that? So people say it's a rule, wave 2 and wave 4 cannot overlap in a 5-3-5-3-5 extension, and that's true. But again, that is not true for a leading diagonal. There is such thing as leading diagonal where waves 2 and 4 do overlap, but you're still in impulse. That's the trick. Doesn't always happen, but the conditions under which they happen is when you're just coming out of a consolidation reversal, either to the upside or downside. There's a lot of buy and sell orders. There's a lot of resistance to price moving in a certain direction. And so you're getting that choppy matriculation through that range, that minefield of orders. And then you get your leading diagonals. Yeah. So yeah, that's in my experience when I see them. And I think this is a likely read for Cardano. Okay. And if you wanted to measure them, this is also common knowledge. You can look it up in your Prechter and Frost, right? The wave 5, which is typically extended, is measured by taking, okay, and this is, again, this is a minimum extension, right? Waves 1 through 3, retracement of wave 4. And then the retracement, the minimum extension that you should expect on average, right? This is all probabilistic because people have looked at these for years and years and years in many different markets. They found that the 1-6-1-8 or the phi ratio of waves 1 through 3 and the retracement of wave 4 is where you should expect at minimum this extended wave 5 to go to. Okay, but again, remember that is a minimum, and it makes sense kind of here because if you look at this falling wedge, you're pretty much just coming back to the origination point of that falling wedge. But I feel like you should come up even more, probably to here or even all the way up to here. Okay, again, this is a bull market. If we're right, this is the start of the bull market. So the last thing you should do is underestimate these moves. Last thing you should do is underestimate these moves. Just get out of the way. Know that you don't know just how much extended, how much these waves can extend. That's my best advice there. All right, so that's Cardano. That's my best read on Cardano. So yeah, that would result in a 36% move, 37% move. That's not bad, right? Not a bad way to start off the bull market. But I do think that is more likely than not. And just not to beat a dead horse, but I'm just curious what extension that would be. Yeah, around the 4236. Yeah, I could see that. Around the 4236. Yeah, I could see that. Okay. So that's Cardano. Reserve rights. I'd say this is a leading diagonal, but it looks a little different. Where here you have, I think it's quite clear, wave 1, wave 2 situation, right? Took around the same time, minimum retracement to the 382. But why is it a leading diagonal, even though waves 2 and wave 4 don't overlap? Actually, they do. They do. It's because what really stands out to me is the wave 3 is the same size as wave 1. When you see wave 3 the same size as wave 1, you know that it's concerted. You know that you're getting some sort of leading diagonal because sorry, I'm reading something. Yeah, I think your initial break of structure was here. That's your big A, and your big B was this. I hope you guys can see that, right? Your 2 degrees of AB basing basically happened already, right? I think this is quite clear. So then you got a little pivot right there, and it leads you to your impulse. So I really like that read here in reserve rights. And again, I think it's very likely a leading diagonal. And all of this is really, it is confluent with what you see in Bitcoin. Bitcoin is not a leading diagonal, but it is printing 5 through 5 through 5 with a very likely extended wave 5. We came to that conclusion for a variety of reasons. I'm not going to rehash it here. But see, a lot of times the market is doing something similar. So Bitcoin looks like it's going to put in an extended wave 5. How do you typically put in an extended wave 5? You do it by printing a leading diagonal. Okay, so I'm looking and I'm seeing leading diagonals left and right, and that doesn't surprise me. Again, I'm not doing this, at least I'm not consciously trying to fit my read and, you know, kind of fit it into what I'm seeing, but I'm just trying to look at the market independently, each and every one of these markets. Look at them as independently, as impartially as possible, to help me as a trader, to protect myself, right? So I can make the best reads possible, so I can, you know, practice the best possible risk management. So anyway, I see wave 1, wave 2, wave 3 is the same size of wave 1, wave 4 retracement, and I think that we're just coming out of this wave 4 retracement. Once again, I think it's likely that waves 1 through 3 retracement of wave 4 print. Minimum of 1618, but I think you're going much higher than that. Would not be surprised if you come all the way here and make this higher high right here in that region to really establish your coming out of the bear market, right? Because you can see this is the bear market accumulation for this asset, reserve rights. Came all the way down. It put in its 2 degrees of AB basing. This is the other low. You pretty much made a double bottom. It's only right that you put this move in just like that and make a slightly higher high, retrace, and then you keep going. So yeah, that's what I see. I love looking at different markets, not trying to, you know, take my read there and put it, you know, I read each and every one of them independently, and obviously because everything's already linked, but they're giving you a similar story, right? Gives me more confidence as a trader to be like, okay, I'm nice, I feel comfortable being long or being short, whatever, in a multitude of these markets. So Dodo, same thing. I see this as a type of a few things that I feel can happen. Okay, just looking at my momentum indicator, that's almost reset to oversold. It tells me that I'm finding some support here. Okay, I think what's likely is that this is a 5-wave move. This is a 3-wave move, but in the form of some sort of triangle, right? And then I'm looking for a continuation. I think this is all corrective. I do not see it as impulsive like the rest of what we've been looking at today. Yeah, that's what I'm saying. I don't see an impulse in this market, in Dodo. I definitely see this as an A wave and as a B wave, and this is a continuation right here. You can also just look at it as a bear flag. Or, sorry, a bull flag, a bull pennant, right? Flagpole, pennant, breakout right there. That's my best read on that, right? These smaller market cap assets tend to be a little more volatile. You see a lot more wicking, which is fine. But, you know, not surprised that this is reading a little differently than a top 10 asset, right? Ethereum, I think that just like Bitcoin, it's in a wave 4 correction. It's not a leading diagonal, but it's in a wave 4 correction that is likely to lead to an expanded wave 5. I think your wave 2 is somewhere down here. I'm not exactly sure where it is. Looks something like this, yeah? That's what it looks like. I think that's highly probable. And you know, my indicator, my momentum indicator, is telling me that whatever this is, it's likely finished. Because this retracement of the wave 4, this retracement of the stochastic RSI, this resetting of the stochastic RSI rather, has it is coincident with the retracement of this pattern right there. So I think kind of like what you see in Bitcoin, you're getting a reset of, you're getting a conclusion in impulse, right, which you should get, of whatever that is, that complex wave 4 correction. And then, not to be repetitive, but this is exactly what you're seeing. You're seeing an sort of a retracement. You broke resistance of this inverse head and shoulders, and you retest the resistance as support. And now you're continuing. So, in other words, right, if you're not just trying to work out a wave count, I think that's really important, to be versatile. And sometimes it's hard, right? Because when you're trying to learn something like Elliott wave, you're just looking at waves over and over and over again, and everything you see is a wave, and it's hard to see things not in a wave form. But sometimes you got to snap out of it and look at things from a different perspective, and that'll help you, I believe. Zilliqa. Okay, I'm seeing a leading diagonal. So I read this, all of it, as 2 degrees of AB basing. That's my big A, targeting wave 4 of the previous trend. This is my big B. This is my small a. This is my small b. Okay, and this is my leading diagonal. My 5, 3, 5, 3. Again, wave 4 coming into that region of wave 2 in my leading diagonal. So let's just point that out, or let's annotate. But it's very much like what you see on Cardano is what I'm seeing here on Zilliqa. Again, this is all probability based. You know, if you have good risk management, then you think in terms of probabilities. Don't think in terms of absolutes. Even if you're kicking ass, you can read the hell out of a market. You want to think in terms of probabilities. Always, anything can happen, and you may be wrong. You may misread something. You know what I mean? Just always be cautious, but at the same time, you gotta act, and you gotta trade. You gotta have confidence. It's a delicate dance between being confident and being foolhardy. Yep. once again, I think you're targeting that 4236 or right above that 4236 with that wave 5 extension. That would not shock me in the least. I think you make this higher high right here and establish the bull trend. Okay, for a lot of people who are out in the market, out of the market, and are waiting for confirmation, this is their confirmation. Not everybody, but a lot of people. They're looking for a higher high to be made in a lot of these markets, right? This would be a higher high. Then they wait for some sort of correction, right? Then they get in. Okay, that takes a lot of patience and a lot of discipline, but that's an excellent way to play the market if you're not already involved. You wait for that higher high, you wait for that retrace, you get in on that retrace. So that's Zilliqa. Actually, let me see. Just want to see something real quick. I see. So I told myself, because I put a little marker here, I told myself that I'm waiting for this move to come up all the way here, because once it passes that, then I can safely put my, given my entry, I can safely put my position, my stops in profit without worrying about it being in a line of fire. I can deleverage actually my position and free up some capital right there. That would be my my stop, 2466. Let me just check that. Just checking my you know, my past self for his accuracy. It's interesting to me. Let's see. How accurate are you, Dean? Let's see. 235. Yeah, that would be pretty accurate. Good job. That would be pretty accurate. Cool. Okay, anyway. Moving on. Dogecoin. I think this is quite clear, right? What do you guys see? I think this is really clear. I think it's one of the more clear examples that we have of a 535 impulse. And here you really see what we call a running flat. You see that? So this wave 4 that Dogecoin is in, you can see it went. This is a 333, I believe. W, X, Y, X, Z. But you can see it's a running flat because this is the bottom of the W, the initial break of structure right here, and this is the final wave, which is well higher than this. Okay, so that's a running flat for you. I think that's quite clear. And I would not be surprised. Let's see. I want to say that this is a regular 53535 extension as of now. Yeah. Okay. There's another way to look at this. There's another way to look at this, and I may prefer this. I think I looked at this like this before as well. I may prefer this right here. Is that even? Okay, I think that's a legal count. Okay, we hit the minimum 2236 right there. Let's look at it in terms of time. Five days. 5 days up. Eight days. 8 days and 16 hours. What's 5 days? Let's see. Let's do the math here. So 120 hours. What is it? 8 days, 16 hours, I said? Eight days, 8 hours. Okay. What's that? Let me just bust out the calculator. This is ridiculous. 8 days, 8 hours. Okay, let's see. So 8 days. So that's 200. So 120. Okay. So why did I just do what I did? And why? I had a hunch. Okay? I had a hunch. So look at this. 1.67. That is very close to the phi ratio. What is the phi ratio? The phi ratio is 618 or 1618. They're the same ratio. It's the golden mean. Okay? 166 is very close to 1618. For me, that tells me that maybe there's something there. Okay? And why do I think that? Because wave 1 and 2, their relationship is comparable. That's why I use the words comparable in time and in price, not equal. Don't be fooled that wave 1 always has to be equal exactly in terms of time to wave 2. They just have to be comparable. In price, we know the relationship is 382 to 618 in a regular 53535 extension, notwithstanding a leading diagonal, okay? Or an ending diagonal. But in time, although you usually get 1-to-1, like 5 hours up, 5 hours down, sometimes you get 5 hours down and 5 hours over 618, or sorry, 5 hours times 618, 0.618. That, you get the phi ratio of time. And the phi ratio works both with the 618 and the 1618. I believe that this instance is one where we have... See, this stuff can get tricky. I believe this is accurate. This is another way to look at it. This is another way to look at it right here. I kind of like this better. Let's look at that. This is more simple. And you know me, if it's more simple, I will gravitate towards it. Yeah. This is closer. Okay. Okay. You guys see what I'm doing there? So this looks to me like I got my 5 waves up and my 3 waves down. 5 waves took about 5 days. 3 waves took about 5 days. This is my AB base into wave 3. I like that best. So I'm gonna stick with that. I think that Dogecoin is doing this right here. Oh no, sorry. You can just do that right there. I think Dogecoin is doing something like this. Hold up, let's fix this. And let's measure this real quick. But yeah, however you slice it, this is a running flat is really bullish. However you slice it, whether you want to take this entire wave structure or this entire wave function, if you like, as a contiguous move, or you're just taking this and then you count this as some sort of AB base. It's hard to say, really. Because our previous read, making this a wave 4, I don't like so much because there's very limited upside to this. I mean, very limited. Because if this is a wave 4, that means that this was already your extension of wave 3, given where wave 2 is. Right? If this is wave 1, wave 2, wave 3 is already extended. Slightly, but it's still extended. So wave 4 comes here, wave 5 is, I mean, it's not going far at all, because it's unlikely that you get 2 extensions in one wave. Do you understand how there are rules and guidelines and ways to count these that's not just, guessing and pulling things out of your ass to get highly probable reads? People don't understand Elliotticians do this, and it is a lot of work. It is challenging. It's not impossible. It's challenging. And you're not always going to have a really high percentage or highly probable read, because sometimes it's just hard to read and fringe stuff happens. But yeah, you work through it, and the more you do it, the better you get. If you really pay attention. So I think, given what I just said, it's unlikely that I understand the dynamics of this entire price in this market, this Dogecoin market. The upside is unlikely to be limited. That being said, I think it's more likely than not that this is a completed structure, a wave 2 structure rather than a wave 4 structure. Okay, and so I'm more torn between this being wave 2 or this being wave 2. I think this is more likely to be wave 2 or running flat, and then this is my AB base subsequent to that. And so if I measure this quite simply, I think my wave 3, and this is where I really like this read, look, my wave 3 is going to make a higher high here, which is very important, because if this were wave 1 through 4 already, if you were reading this as like wave 1, 2, 3, 4, wave 5 is statistically unlikely to come and make a higher high. Why? Once again, because it's very rare, it's exceedingly rare to have more than one wave extension in an impulse. I've seen it once before in years of study. Once. It was in Ethereum. But it's very unlikely. It's exceedingly unlikely. So likely more likely than not that this is a 1-2 situation. I like the time component here, okay? And that you're getting wave 3, you're making your higher high here, wave 4, so you'd get, I think it's more likely than not, you get a good 70% move here for wave 3 for Dogecoin. You get your wave 4 and then your wave 5, okay? Something like that. So that is my read on Dogecoin. Litecoin. Okay, first things first. This looks to me at first this looked to me like a corrective wave, but I no longer think that. Okay, there's a few things that can be happening here. This is challenging. I've kind of wrestled with this. Sorry, let's go back to Litecoin. A few things can be going on here. Okay, let's go. I think when there's confusion, the best thing to do is go on a higher time frame. Try and figure it out there. Then you go smaller, right? So I'm confused on the smaller time frames. I'm going to zoom out. When in doubt, zoom out. Okay. I think the straightforward analysis is made. Once again, you go back to the basics. Support and resistance. Support and resistance, it trumps everything. So basic support and resistance tells me that whatever this is right here, this is going to break up and out because of what happened here. Because I broke this resistance and I created it as support, I'm likely, more often than not, probability-wise, this is likely to result in a breakout of at least this magnitude. So I'm likely to target this level before anything else in this market. Okay, so if I so that's my high time frame read. I'm quite bullish on this still, and I don't think it's likely that we breach, at least in any significant way, the 73.50 level. Okay, so if I'm looking at my trade, as long as I'm not around this area, I'm quite comfortable. Okay, this to me is a likely area for retest if it were to come back down. That's if it were to come back down. It doesn't have to, but if it were to come back down, I want to steer clear of this area. Okay? Now, I'm now going to examine this price action right here. Okay? So let's jump down on the 4-hourly. So yeah, this is my method, guys. I hope this helps. I really hope this helps. Hope my sharing all of this stuff, and like I said many times, this is what I do. This is how I make money to feed myself, my family. I hope I don't care about sharing my quote unquote secrets. There's no secret. It's a lot of work. It takes a lot of time, a lot of patience, a lot of training. It can be very lucrative though. But this is my method. If I'm looking at a chart, I'm confused, I zoom out, try to make sense of it. Then I gradually go on to smaller time frames. So on the smaller time frame, I'm looking at it, and I'm thinking this to me looks very wave 1, wave 2. Like the time it took to go up here. Whoops. Time this took and the time this took, they're almost exact. Almost like, I could just eyeball it. It's like very comparable. I like the, it's very quintessential wave 1, wave 2. 5 waves up, 3 waves down between 0.5 and 618. It's sharp, zigzag for wave 2. I really liked it. Okay, so it has the look, as Prechter and Frost would say. I want to put that in right there. So that's the first thing I'm going to do. Okay, if that's wave 1 and wave 2, then this is likely to be wave 3 up here. Okay, so what I'm going to do is I'm going to measure this. And here's what I don't like about this. Actually, yeah, this can't be the end of wave 3. Why? Because, do you see, it's in no man's land. Wave 3 either ends at the 1 Fibonacci extension, right, which is a minimum extension of wave 3, or it comes between the 2 and the 1618 in this region. Right here, we have yet to hit the 1618, which leads me to believe that if this is likely a wave 1, wave 2, then whatever this is, wave 3 is not yet finished. And that makes sense, right? If this indeed is a bull market, then, wave 3 is going to show out. So I'm going to focus now on, first I'm going to take this and I'm going to pull it up here. Again, this is all probabilistic. I hope everybody understands, like, this is how you do Elliott wave. It's not 100%. Sometimes you may be 100%, but this is how you come up with high probability counts. You don't just throw stuff on there. And I don't really see the point in, sometimes I watch certain channels, they already do all the work on the front end, and you don't even know how they got there. But I like to take you through the syllogistic process of my, coming to these conclusions, because it helps. And I wish, well, whatever. I did get some of that through, reading and studying. But yeah, that definitely helps, right, when you're learning. So just looking at this, let me make this clear so it doesn't get in the way of my reads. I'm now focusing on this as being a wave 3. Okay. Once again, you can see the wave 1, wave 2 situation here. Okay, let me not do this. Hold on one sec. I'm just going to do this barehanded. Once again, it's highly likely that this is a wave 1, wave 2 situation. Okay? Just, again, the time and the price fit. Wave 2 typically is a sharp retracement of wave 1. That retracement goes between the 0.5 and the 618, and it usually takes just about as long as wave 1. That's what I see here. That's a telltale sign. So I'm looking at this as being wave 1, wave 2, extended wave 3, wave 4, and then probably a very truncated wave 5. Okay? And so wave 5, if I'm going to target this, I'm feeling more and more confident as this analysis is going. The more this analysis goes, because things are starting to fit. It's like doing a puzzle and you have no fucking clue what it's meant to be at the beginning. Then you start putting the corners in, start putting the sides in. You start with what you know, with a high probability read. And then you're like, oh, you start gaining confidence. The puzzle starts making more and more sense. So here, I think the easy read is just project wave 5, a regular wave 5, given an extended wave 3. You already know this wave 3, so I'm talking about this intermediate wave 3, right? Because I'm now focusing on this wave 3. So I'm looking inside of this, so I'm looking one Russian doll down. So I'm talking about the intermediate degree, okay? This is extended. So it's already telling me with a high degree of probability, if this is extended, all I have to do to measure wave 5 is take this retracement of wave 4 and an extension of the 618 gives me the extension of wave 5, which is nothing out of the ordinary. It's just run of the mill. Okay, I'm expecting a run of the mill wave 5 for this intermediate wave 3 because intermediate wave 3. Sorry, I'm expecting a run of the mill wave 5 for this wave 3, this primary wave 3. So I'm expecting run of the mill intermediate wave 5 for this primary wave 3 because intermediate wave 3 was extended. Hope that makes sense. If I'm confusing you, just let me know. And then what I'm going to do here, let's say that this is accurate. Okay. Let's say that this is accurate. What I would do, and this is why it's hard to predict exactly where it's going to start. You just recognize the fact that you're in. Look at that, guys. I love this count. I went from I got no fucking clue to I love this count. Why did I just say that? Look at this. All right, let me make this opaque once more. So working through all of this, this is the result of this count. Okay, this primary count. I have primary wave 3 coming between 1618 and 2. And I didn't just put it there. How did I derive that? I pretty much measured that through working and analyzing and counting this intermediate degree, wave 3 and wave 5. So basically, if I do a run-of-the-mill projection of wave 5 given my wave 3 that's printed, okay, and wave 3 is all of this right here. Wave 3 is all of that right there. It's very likely that wave 5 come here. So I think we get a $91 Litecoin before we get some more retracement and then continuation. A lot of people who don't read Elliott Wave, who think, oh, Litecoin's been going up for a while now, it's got to be over. They're going to fade this. They're already starting to enter shorts. But you understand, the way the bull market works is you get fits and starts. And it just keeps going up, retracing, up, retracing, up, retracing. It's really hard to understand exactly how it's going to do it, but I think that is the idea of trying to know how it's going to get there is overblown. It is overrated, right? Even though I know everything I know and I can count waves and all that stuff to a high degree of probability, I'm smart enough to know that it's a low probability affair to try to nickel and dime these wave progressions. So I'm not going to try and be smarter than the average bear and sell my Litecoin at 91.86 and then buy back at, like, that's what I did when I didn't make money. Like, that's what I did when I was none the wiser. Like, I will maximize my profits because I will let things retrace and not bat an eye. I will be more patient and wait for everything to happen, because if I'm wrong, I can get left behind, right? All it needs to happen is a running flat somewhere, or some, anything, or a misread, and boom, it's gone. Do you see? But I think this is a very likely read for Litecoin. I think we're in primary wave 3, and primary wave 3 is not yet finished. But at around 91.86, when we hit the phi ratio of this extended wave 3 retracement of wave 4, then we hit another resistance, we retrace, and then we continue. Okay? So that's what I see in Litecoin. And I'm not surprised that Litecoin's already doing all of this bullish stuff, because if you follow my work, I said long time ago, don't be surprised if Litecoin front runs the entire crypto market because of what has happened for the past few years on the charts. It's put in a leading diagonal in its cycle waves. Okay, I said that a long time ago. Okay, moving on. We have synthetics. Once again, don't fade this rally. Don't fade these rallies. I mean, you can do whatever you want, but I wouldn't. I'm trying to I think you have an impulse starting here. Reason I say that is that this is clearly a corrective move that is not part of a leading diagonal. I do not believe. I think this is your initial break of structure, your big A, this is your big B, this is your small a, this is your small b. I think your impulse starts here. So I'm going to start reading that. I don't like the time factor here, right? You go up for 28 hours and then you do this flat correction that takes 44 hours. Is it 44 hours? Yeah, it's 44 hours, yeah? Oh, no. It's 68 hours. 68 hours. Yeah, I just don't like the time factor. Okay, if this has to be impulsive, I think what needs to be happening, what's likely happening, is that. Let's see. Let's jump down on the hourly. let's see. 7 hours. 17 hours. Yeah, I don't know. I really don't know. This is confusing. Then this is a pivot. This, okay, if I really want to, I'm not trying to force anything. I'm just trying to look at things objectively. This is a pivot. It's got to be a pivot. It's got to be corrective. There's no way that this is impulsive. It's just the time factor of this and that, right? The up and the down, they're just too incongruous for this to be impulsive of the same degree. So this is I've got this as being a corrective move, perhaps some sort of pivot, right, after your A-B basing. And this is your bona fide impulse right there. That's what I'm reading this as, okay? So once again, I like this as a 1-2 move with time and a price. Is 3-4 over here? And was this 5? Let's just measure it real quick. Okay, so yeah, that works. Take 1, 2, retracement. Okay, wave 3. Okay, this works. This works. You see that? Wave 3 hits right between the 1618 and the 2. Wave 5 comes all the way here. I think this is it. Okay. I think this is what you got with synthetics. I think this is a good read. This is a high probability read right here that we have. I think you just put in your first impulse of the bull market for synthetics. I think what you're getting now is your 3-wave move down, okay? So I think what you're going to get for synthetics is going to be, you've already put in your A wave, targeting wave 4 of the previous trend. You're going to put in a B wave up and then a C wave down, and all of that is going to take approximately 1 day, 18 hours. So let's measure that. Okay, Wednesday morning, 5 a.m. my time. Okay, that would not surprise me. Okay, usually the B wave takes the longest, right? So yeah, this would not surprise me. This is what I think is happening with synthetics. Go on the 4-hourly time frame. Look, your momentum indicator is telling you as much. Your momentum indicator is saying you're topped out. You're at the top of this move. And maybe you do something like this, and then you only bottom out right here. Do you see that? There's confluence here. I like this read. I really like this read. Guys, we're doing so well on our reads today. We're starting out not knowing anything, which I think is one of the most powerful mind states. It's kind of like a blank slate. You don't have any predisposed, there's no, like, I know this, I know that. You don't know shit, and you assert, I don't know anything, and then you start figuring it out. Powerful. I think that's huge. Knowing that you don't know usually, ironically, leads to knowing something. So yeah, I like that count for synthetics. I really like that count for synthetics. Yep. Okay, let's move on. Algorand. I think this is still in correction. I think it's quite clear. I think if you look at that move down here, right, on the 8th, it was, or 9th, you bottomed out, you made an initial break of structure. That's your big A, your big B right here, right? And then you had these little moves over here for the second degree. So I think it looks like small A, small, well, I gotta change this. I can't even see. Let's get rid of all this. Let's just start counting from here. I think it's small A's here. Ooh. Small B. I want to say small B's finished right there. My first instinct, or my first this is what I want to say. I want to say that your impulse starts here. Let's just run with that for now. Don't know, but let's just say that was the case. So we go up. Do we go up from here? Yeah. No. What do we do? I think we go up from here. I don't know. This is tough. Let's see. Yeah, there's no way. There's no parity in time. Yeah, there's... Okay, how about this? This is... let's see. Okay, I like it. Here's what I like. This is a corrective pivot. That's what I like. Boom. That's it. This is an A wave. This is a B wave. That B wave respected the 0618 of that A wave. It's a corrective pivot. It's a corrective pivot in the way that you have A, B, right? Big A, big B, small A, small B, and then that's your pivot. It's a zigzag. That's your move. That's what you're getting ready to print. So I could see Algorand going up a big deal from here. And that will be the first impulse of the bull market for Algorand. I want to point out at this point that although a lot of things are working and looking to be in a similar state, you know, you read Bitcoin and you kind of know what the rest of the market is doing, I think it's quite clear. Looking at our analysis from asset to asset, what's really clear is that everything is slightly different. Some things are in impulse, some things are in correction, some things are in wave 4, some things are like this, in a pivot, right? But they're all either going up or going down. That's the beauty. But like, you know, to be able to really pinpoint the mode of the price action, the different functions, I think it takes a little more subtle analysis. Okay, BNB. Oh, let's put that down before we forget, because you know how I do it. I like to look at it and then rework it from scratch, which is good and bad. Kind of takes more time than it should, but sometimes I don't have really, you know, reads that I'm like, oh my, I'm married to this. But like today, I'm like, I think these reads are you're gold. They're gold, Jerry. I feel very confident about these reads. I like these reads today. Okay, so I want to put those down. This is a case where I zoom out and try to make sense of the higher time frames because I'm a little confused. Okay, and the first thing I want to do is count this bear market consolidation from May 12th. That's my initial break of structure. This is my B wave. This is my small A. This is my small B, putting in a zigzag. Okay, this is wave 1 and wave 2. I want to say, just off the rip, not trying to be too careful. Just you know, sometimes the first read is the best, and you just make it, right? You don't second guess yourself. So that was my first guess. Let's see how accurate that is. So it took about 4 days, let's say 4 days to go up. This took about 9 days, but you could argue, yeah. Okay, this to me looks like this is your first wave up and out. Or hold up. Let's go back. Just gonna look at this one more time. Okay, yeah. So your pivot's down here. So this is not pivot. This pivot. This is your AB pivot. This is definitely my impulse. I'm very, very. That's a confident read. That's my impulse. Okay, I like that. And I believe that that's my wave 4. Okay. So this is my wave 4, I want to say. So I think my wave 2's down here somewhere. I don't know where, but maybe here. It's tough. This is not a wave B, and I know it's not a wave B because if this is a wave A, if this move up is wave A right here, this retracement is too shallow because we know wave B retraces at minimum to 0.5 Fibonacci retracement level. The fact that we haven't hit the 0.5 makes this one thing and one thing only. Wave 4. So I think it's highly likely that somewhere down here you have wave 1, wave 2, wave 3, wave 4. You're looking for wave 5. I think that's a highly likely read. Okay? So what you're looking at is very likely an extended wave 3 into a protracted wave 4, and now you're looking for, I think, a run-of-the-mill wave 5 because you've already had an extended wave 3. So so 2 ways to get wave 5 projected, okay? One way is to take your wave 3 and you take your retracement of wave 4 and you project wave 5 to the 0.618 of that wave 3, okay? But I don't know where wave 2 is, okay? So I'm not going to use that method. I'm going to use the second method. I'm going to take the inverse 1.618 Fibonacci retracement level, 1.618 inverse of the wave 4, and then project wave 5. So I'm going to take my Fibonacci retracement level. I'm going to take the top of wave 3 and the bottom of wave 4. Okay, and so I'm going to target here for wave 5. So about 338. And again, it's highly likely that is, I know it doesn't look that good, but based off of my read, I think that's likely. I don't love this read. I don't love it because I'm not making a higher high. Or am I? Hold up. Let's put it in and then we'll assess it. Okay. Okay, sorry. Let's try that again. Let's just assume wave 2 is down here somewhere, okay? Rough assumption. Again, we didn't use wave 2 to measure wave 5, so it's okay. We're just assuming there. Okay. So let's assume it's something like this. I think this is likely. Okay. So if this is the case, what's it look like on the higher time frame? Does it look believable? Sure. Why does it look believable? Because at the end of the day, this is clear resistance right here, right? This is your bull market or your bear market consolidation, right? Since May, you've been playing with this right here. So it makes sense that you come up here and this is resistance. And you probably put in your 3-wave move before continuation. I like it now. I like it more. That we zoomed out and kind of assessed it, right, in terms of support and resistance. Like, does it make sense to say we're in a bull market when you come up only here, especially given this? But I think this now can be looked at as anomalous. Okay, I don't know what happened here, but this was November 8th, a big sale, like a strong sell of. Okay, and what happened on November 8th? That was the FTX, right? So, okay, makes sense. All this makes sense, right? Look at this. Look at Bitcoin real quick. What happened on November 8th? That happened on November 8th. Do you see? That was the beginning of the FTX deleveraging, which made a lower low in our bear market accumulation, right? We were accumulating in the bear market. We were going along just fine. We had set a low right here, and then boom, we made a lower low in our accumulation channel, which ended up being okay in terms of, you know, the larger scheme of things. You're still holding, this is still channeled or within the standard deviation of being within that channel, but you did make a lower low, not something that most people expected. Okay, and so that was November 8th, and you look at Binance. I think I mean, this is fire analysis today. I'm impressing myself. Look, this is exactly what you have on Binance right here. At that time, you came up, and I think without that deleveraging event, you make a higher high, and you're probably putting in some sort of zigzag. Because, right, you have a zigzag here. So without that deleveraging event, you're putting in a zigzag. You're probably going up, but it's fine. It looks a little goofy because of that. So this is that anomaly, that black swan event. Doesn't completely break the chart, but you see it throws everything for a loop. But essentially, this is still resistance. This is still a level that's being respected. So you're going to come respect this, put in a 3-wave move to correct for this 5-wave move to the upside, and then continue. Okay, I like that. I like that a lot, and it makes sense fundamentally. Okay, last but not least, I believe this is the last one. We're going a little longer than usual, but I think we did a lot of good work today. Okay, XRP. Okay, so just on the high time frame, initial break of structure, counter wave. I think this is quite clear, right? Like that. That's how you read it. And this is your pivot right here. Your impulse starts right here. Right there. Okay? 2 degrees of AB basing in a pivot. You can see it throughout. Very consistent. Very consistent. Most people don't know what an AB base is. That's my edge. I promise you that's my edge. That information alone will make 8 figures, 9 figures, you know? Just knowing how to read the market. All right, let's see. So this was my pivot. What did I say was my pivot? Sorry, I got a little distracted. Yeah, my pivot's right here. Yeah. Boom, boom. Ah, right here. I think this is the start of my impulse right here for XRP. I think this is wave 4. Wave 2 is, I don't know where it is. I have to guess. If I had to guess, I'd say it's over here. I'd say this is a leading diagonal. That's my best guess right here. Yeah. It's quite shallow wave 2. Does it meet the minimum retracement? Does it? Let's see. I don't like that. If that's not wave 2, then wave 2's down here somewhere. But if wave 2's down here somewhere, then again, this is an extension. And so we shouldn't expect wave 5 to come up much. But I don't like that, because then wave 5 kind of ends in no man's land. You see what I mean? I think that's unlikely. Let's see. Okay, there's another way to look at this. Okay, I like it. Here's what I'm seeing right now. Look at this. This is like really, you need to be creative. And I don't say that pejoratively. You need to be creative because you have to be able to see possibilities. Doesn't mean it's probable, but you have to be able to see possibilities. I think as a good Elliottian, you know, you don't just make shit up. You got to assess them reasonably, but you have to be able to see that other things non-linearly, you know. I'm seeing this. If I just look at this region right here, and I look at this as, you know, another series of AB basing, right, on a smaller time frame, which, you know, it always happens. Once you get a drawdown, you get an accumulation that absorbs that, all of that supply, and you have to put in at a smaller time frame, on a smaller time frame, A/B basing. You have to do it. It's just how things work. So you should be able to count 2 degrees of A/B basing here as well. And on this time frame, on this far early time frame, I'm counting this as my big A. This is my big B. I'm counting this as a 5-wave move. 1, 2, 3, 4, 5. Okay, that's my small A. And this 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5 as a running flat. Yes, this is my running flat, complete with a 3, 3, 3, 3, 3, 3, 3, 3, 3, ending diagonal. This is not straightforward, but I think this is likely. Do you see that? I like that. I like that. So that would complete your A/B base on this time frame. And from that, you should get a breakout, right? Big A, big B, small a, small b. All this is small b. That's the tough read. That is the running flat. Then you go into impulse. I like that. I like that a lot. Okay. That's what I see on XRP. Where's your next target? Stray marks drive me nuts. There we go. I think your next target is, you're making a higher high, right? Up here somewhere at the very least, right? This is your bear market accumulation, all this stuff. 2 degrees of A/B basing, absorbing all of this supply over past 180, 200 days. You're making a higher high. You're showing that you're in a bull market. You're breaking this high. You're making it, you're retesting it, and then you're on your way. That's what I'm seeing in XRP. Guys, that was the last token, asset, coin. I hope that was helpful. Hope that was useful. I had fun as always. Like, share, and subscribe if you're getting any value. Hope you guys are well positioned to take advantage of this new bull market. And I will see you tomorrow. All right, take care. Bye.